This week we saw the S&P 500 went from one extreme of the weekly range to the other extreme. And looking at this SPY, the ETF for the S&P 500, notice on Tuesday it came up to the upper range of the weekly expected move. And then on Thursday it came down to the lower range of the expected move. Now remember last week we talked about this area of confluence here. This area of confluence involved this gap fill and also the lower range trend line here, the supporting trend line. Then finally, we also have a Fibonacci retracement from this swing, this 38.2. So when we see multiple technical come into one single location, that's what we call a confluence. And there's a high probability we're going to see some price reaction when we have more than one technical come into a price area. And right now, basically what we were looking for after Thursday, when it come down to this confluence, is to see will we get a bounce here because it came down to this supposed to be a supporting trend line, and also the 382 retracement, and also the lower range of the weekly expected move. In addition to this gap fill here, so we definitely got a little bit of a bounce here on Friday. So now the question is this a head fake or a dead cat bounce that it just bounce and then will eventually come down and break this trend line and dip below this area confluence and come down to this area here where there is this 50% retracement and it's also a high volume node here? Or would it continue to move higher and put in a higher high and consider this is the pullback that we're looking for, and now we found support, and we could watch the S&P 500 go back up to a new high territory. So in this video, we're going to take a look at the market internal and also some of the price action and see what the market is telling us. So stay tuned. Looking at this S&P 500 monthly chart here, you can see that the S&P 500 is holding a small loss, pretty much a break even. Right now it's 0.03% loss for the month of July. So we got a few more days before the end of the month. So the question is, will we get a positive close on the July or be a negative close on July? Right. So right now we are basically looking at this, and it's a little bit of a spinning top type of doji. So it's basically a little bit indecisive type of a price action right now. And looking at the NASDAQ 100, you see the NASDAQ 100 is a little bit more bearish than the S&P 500. For the NASDAQ 100, month to date, it's losing 3.35%. So definitely it looks like we're going to have a negative July for the NASDAQ 100 unless it come back relatively strong in the coming week. And looking at this chart here on the daily on the S&P 500, we'll look at the S&P 500 using the SPY and look at the price action in a little bit more detail later on. But right now, we're looking at this S&P 500 cash index. Remember, we were talking about this engulfing candle here, right? And was basically going back to the October 2022. That was the last time we saw a similar type of price formation, and we saw a 27% pullback. So right now we're basically questioning, will we see a 27% pullback? If we do, then it's basically going to bring it down to somewhere in this area here. So right now we are seeing a little bit of a pullback on a weekly basis. For the week, the S&P 500 lost 0.83% or 46 points or so. So we'll see, will we see a continuation of a move down in the coming week? And here on the NASDAQ 100, remember we're talking about this weekly evening star type of pattern, and we saw that back here in October of 2022. Right here is pretty much similar type of a price pattern, and back then we saw a little bit of a bounce for the following week, but on this one here, we actually got a little bit more sell-off, a continuation on the downside. So right now, we're basically looking at this to see will we get a bounce in the coming week or will it continue to come down. So for the week, the Nasdaq 100 lost 2.56%, or almost 500 points for the week. So just quickly go over the performance for the indexes. We see that the Russell 2000 has been the strongest performer for month to date and also for week to date. And for the year, it's actually coming up. It's gaining a 11.5% or so. And also the New York Stock Exchange Composite also had a relatively okay week because it, along with the Dow Jones Transportation and the Dow Jones Industrial, they all gain a little bit over 0.75% for the week and holding somewhere around 3%, a little bit more than 3% for month to date. Although the transportation year to date is pretty much flat, almost break even, only holding a 0.13% gain. But the S&P 500 and the Nasdaq is still holding above 10%. It's sitting at 14%, 15% or so for these three indexes. These are basically the mega cap tech heavy type of index. So we're still seeing a above 10% gain, but the month to date they are all negative. So was the week to date, and they were negative. And looking at this chart here for the indexes, we notice that the Nasdaq 100 and also the S&P 500 has the deepest pullback compared to the other indexes. Notice that we also saw everybody kind of got a little nice bounce on Friday here, right? Although the bounce for the S&P 500 and the Nasdaq is not as substantial as the other one. And look at the Russell 2000. It's getting back close to this 52-week high. So I wouldn't be surprised to see put in a new 52-week high next week on a closing basis. Now, if we take a look at the sentiment here, looking at this chart on the market sentiment, we see the VIX is coming up toward this 20 level, although it did pull back a little bit after it got up to, I believe, that's somewhere around 18, 19 area. So right now, the market participants are getting a little bit less complacent, and they could get into a little bit of a fearful mode once it get up to this 20 area. Now, they are hedging because look at the put call ratio, it is above 0.75, sitting at 0.78. So it is entering back into this, what I call the hedge zone, which is between 0.75 and 1. And here we are looking at the up-down volume ratio and also the daily advanced decline. Notice that the S&P 500 is pulling back, but we are seeing quite a few days with pretty good up-down volume ratio, pretty positive up-down volume ratio. And look at today, it's actually 4.5. So it did have some strong buying here, accompanying this little bit of a bounce on Friday. But even though on Thursday we had a pullback, we did see a positive up-down volume ratio and also a positive advanced decline. And today, there were actually over 1,800 more advancing issues than declining issues. So that's quite broad market participation on this bounce here. And looking at the new high, new low, we did see the number of stock making new 52-week high came back up and went back above this 200 level. And throughout the week, the number of stock making new 52-week high actually outnumbered the stock that make new 52-week low. So even though we saw the market or the S&P 500 pulling back, there are quite a number of stock making new 52-week high. So that is a positive sign here. And you're looking at the New York Stock Exchange cumulative AD line. See, it's actually getting back close to this high here, while the S&P 500 is actually pulling back. So we are seeing a little bit of a positive divergence here. So I wouldn't be surprised if this thing get up to a higher high next week, the AD line, and we could see the S&P 500 trailing and set up a set up a positive divergence for us to see a little bit more substantial bounce up toward the high here if the AD line is able to take out this previous high. And for the NASDAQ market, we also see a similar type of up-down volume ratio, even though you see that the NASDAQ 100 is pulling back quite deeply, and also the advanced decline also showing positive internal, showing there are more advancing stock than declining stock, even under a little bit of a sell-off in by the NASDAQ 100. This is kind of indicative of the mega cap, the Magnificent Seven stock that's kind of pulling these, the S&P 500 and the NASDAQ 100 down, while the other stock within the index is actually making some, making up some ground on the upside. And we also saw that on the 52-week high versus 52-week low. You see that the number of stock making 52-week low in the NASDAQ market is still kind of relatively low, kind of under the 100 level, while the number of stock making new 52-week high got back up above the 200. So you can see throughout the week, the number of stock making new 52-week high outnumbered the number of stock making new 52-week low, even though we saw a substantial pullback from the NASDAQ 100. So that's also a positive sign for the NASDAQ. And here, looking at the NASDAQ cumulative AD line, you see that it actually came up, put in a little bit of a higher high compared to this previous high, while the NASDAQ 100 is closing with a lower high. So that's a positive divergence. So we could see a little bit of a bounce, in the NASDAQ for the coming week if this continue to move up. Otherwise, to resolve this positive divergence is for this thing to come back down and get into a negative divergence territory. But right now, looking at this and also the other internal, is a little bit more leaning toward that we might get a little bit more bounce. Now we're going to take a look at the price action of the SPY and also the ES, the E-mini S&P 500 later on, and get a better look on what we could expect. So overall, looking at this sentiment, we're definitely seeing the market participant a little bit less complacent now, and also putting some hedge, position. But if we look at the internal is telling a slightly different story, because we are seeing more stock internally making new 52-week high, and also more stock or advancing than stock that are declining in price, even though the index is pulling back on the down day. So we definitely seeing a little bit of a rotation, and the money is kind of moving away from some of those mega caps tech stock into the more of a the value and defensive type of stock. And you're looking at some of the sector in the S&P 500. We see that on a relative strength basis, and this is on a weekly basis, we see that the technology has been relatively weak, underperform to the S&P 500. And also we saw that on the consumer discretionary as well, right? And along with the communication. But notice that for the healthcare, we actually outperform, and also the industrial along with the financial. And the same with the stable. We see the consumer stable is outperforming a little bit the energy and the real estate, along here with the utility and also the material. So as you can see, the sector that are weak are those that were strong, while these sectors were weak. So we're basically looking at the tech, the communication, and also the consumer discretionary. The money is flowing out of those sectors and moving into these a little bit more of a defensive, and the value sector. Now let's take a look at this E-mini S&P 500 daily chart here. Remember earlier we were talking about the S&P 500, the area of confluence, this gap fill, the trend line, the lower range of the weekly expected move, and also this Fibonacci retracement 38.2. See, the price came down and then got a nice bounce. On Friday, it's bouncing back up, trying to get back up into this balance area here. So you get notice that it got rejected at this high volume node for the last two sessions. So the coming week we'll be watching would it be able to get above this HVN and see would it push up into this 5560 area here to see would it be able to hold about this area and continue to push up. If it doesn't, then we're basically looking for a little bit of a pullback. Then we'd be watching this area once again. And here are the ranges that the market is pricing in for the coming week. You see how the market is pricing in up at this node here, this little bit high volume area. And it is pricing in between 56.15 and 56.50 for the upper range. And the lower range is actually pricing in right near this 50% retracement, this 50% Fibonacci retracement. And the lower range is between 53.98.50 and 53.65. So what we'll be watching next week is would it be able to come up and push above this, this balance area and work itself up into the upper range. Now it's critical to see would it be able to move above that, or would it come back in and maybe test the trend line, or kind of bounce around in this balance area once again before it make a directional move either up or down. Now, the other thing is to watch, maybe it, won't be able to get above this HVN and get rejected and push back down. Then we'd be watching this lower range for the expected move for the coming week to see would it be able to hold support here. In other words, would the Fibonacci 50% be able to provide some support for this thing to bounce back up and then possibly come back up into this this gap here, back testing this gap and see would it be able to, make it back above it. If it doesn't, then we're basically looking for a lower high and a lower low to work itself down and possibly eventually get down to this 0.618 retracement. You're looking at this daily chart for the SPY, the ETF for S&P 500. Again, basically saw the price came down to this area confluence, got a nice bounce here. Right now, we're basically looking for the possibility of coming back up to this 550 area in the coming week. And for the coming week, the market is pricing in the upper range between 556.5 to 554.70, and the lower range is between 534.20 and 531.50. So notice that it is pricing in this lower range near the Fibonacci 50% retracement and also the upper edge of this balance area. So right now we're basically looking for that as a possible support or a retest area. If the price breaks that trend line, come back down, then we'll be looking at this area to see would it be able to find support here. Now, if it continue to push up and be able to get back above this 550, then we'll be looking at this upper range between 556 and 554 to see would it be able to break through and come up to make a higher high. If it doesn't and it get rejected, then we'll be looking at the possibility of come back down to this high volume node here and see would it be able to hold this high volume node or this trend line. And if it doesn't, then we'll be looking for a lower low and lower high. So this would be a lower high. And once it breaks through this gap fill here and dip below the 382, then we'll be pushing in a lower low. So as we saw on the internal, it kind of tells us that the market is doing a little bit of a rotation, right? Money is rotating out of these mega cap tech stock into some of the value and defensive stock. So the question is, will this rotation generate enough strength to push the S&P 500 to a new all-time high, or would it eventually that they too will run out of steam and then reverse back and drag the S&P 500 to a lower low? So those are the things that we need to watch in the coming week to see how those defensive and value stock perform in the coming week, and will the mega cap stock be able to find some support and start to show some bounce. Now, there are, some of these mega cap tech stock going to be reporting earning in the next coming week or so, such as Apple. I believe they're going to start reporting at the beginning of August. So bear in mind about that. right now, so far, the market is not really impressed with the mega cap tech stock earning report, or at least their guidance. So be cautious out there, even though we're seeing a little bounce and we're seeing some confluence, and there are some positive internally to tell us that we could see a little bit more bounce in the coming week, but we don't know how long lasting that bounce will be or how high that bounce will be able to take us. Thank you for watching. If you'd like to see more of my contents, go visit my newsletter at Substack. I have placed the link in the description below. Help me promote this video on YouTube by clicking the like, and if you are new to this channel, click the subscribe button to support this channel. Good luck on your trading, and I see you in my next video.